Mark's the Executive Chairman, as I said, of Capricorn Metals and a chartered accountant with over 30 years of experience in the resources sector. Mark joined the company in July 2019 after retiring from Regis Resources in October 2018. During his time at Regis, Mark oversaw the development of Regis's 3 operating gold mines at the Gibson Gold Project, which culminated in the project producing well over 300,000 ounces of gold per annum. During this time, the company grew from a small explorer with a market capitalisation of around $40 million to a significant gold producer with a market capitalisation in the order of $2.5 billion. During his time at Capricorn, Mark has been an integral part of the financing and developing of the Karlawinder Gold Project and the acquisition of the Mount Gibson Gold Project. Over to you, Mark.
Thanks. You've done my presentation for me, thank you. Good morning, ladies and gentlemen, and thanks again to Diggers and Dealers for the opportunity to present again this year. We really do appreciate it. We've only been at the company now for just over 3 years, and I think we've managed to achieve quite a bit during that time. We started by redesigning the Karlawinder Gold Project. We financed it and then delivered the construction on time and on budget during the worst of COVID in 2020 and 21. We produced our first gold bar at the project on 30th of June last year, and then followed that up with a fantastic first year of operations, which is an absolute credit to our operating team led by Paul Thomas, Joe Bosso, Tony Hinkley and Stephen Evans, our General Manager on site. We also, about this time last year, purchased the Mount Gibson Gold Project. We're thrilled with that acquisition. We believe that that project will, in the medium term, become our second mining operation. Our shareholders have, I think, appreciated the journey that we've been on so far. The value of the company has gone from about $60 million in 2019 when we got involved to its current market cap of about 1.4 billion Aussie dollars. I'm going to talk about our projects in a moment, but before I do, I thought it was worthwhile spending just a moment to think about the history of the Capricorn team, particularly given the way the market is now, where perhaps investors don't need 5 or 6 gold stocks, maybe they only need 1 or 2. And I think it's important to differentiate between those who have and can develop and operate projects successfully as against those who talk a lot and do very little, or as we've seen in recent times, possibly even worse than that, to actually go ahead and raise money and go mining only to lead a trail of destruction behind them. I think our DNA of our group is one of quiet delivery and exceptional returns, and I thought it was worth reflecting on our journey. We were involved in Equigold from 1995 to 2008. In that company, we built and operated 4 processing plants and open pits in Australia, produced 1.6 million ounces of gold at that project before we sold the company to Lihir Gold in 2008 for about 1.2 billion Australian dollars. We then got involved at Regis Resources, built 3 processing plants at Duketon, as you'd well know, 10 million tonne operation there. And during my time at Regis, we produced over 2 million ounces of gold. And if you look at the fundamental thing, I guess, or the thing that shareholders care about the most, is actually what value did we create from all of that mining. Well, those 2 companies combined, when we got involved, had a starting market cap of about $80 million. We only ever raised $120 million between those 2 companies to build all of those projects. We paid over 3 times that in fully franked dividends. And by the time I left Regis and the takeover of Equigold, we had delivered equity value of something in the order of 3 billion Aussie dollars. So there's no doubt that I think we've had a history of very strong performance. How have we done that? Well, I guess we've got a fantastic team that can execute these projects. We stick to what we know, which is gold, open pit, CIL processing, and primarily Australia. We're, I guess, fanatic in our view of the importance of getting the resource and reserve estimates right, because we know through our own experience that Getting that right is the crucial platform for the business. As I said, we've got a great team, both of development and operating professionals, which allows us to repeat designs that we've used in the past very successfully and deliver fit-for-purpose mining operations at the lowest cost in the industry. We have a very strong focus on cash flow. We have very significant management ownership of the company, so we're very much aligned with shareholders, and we try our level best to issue as little equity as we possibly can, knowing that this is the best way to give our shareholders a reward if we can perform. In terms of the application of that business model to Capricorn, well, we identified some years ago the Karlawinder project as a robust and executable project within our skill set. On getting involved in the company, we redesigned the plant with a view to making it as flexible as possible and increasing the throughput. We basically managed the construction of the project in-house, which led to a very low cost per throughput tonne for the construction relative to the industry average. We believe we've identified a very similar opportunity at the Mount Gibson gold project, and I'll talk to that in a moment. But we see that as a compelling acquisition for the company. It was a $39 million acquisition for a 2.1 million ounce resource that we believe will be fast-tracked into development of our second mining operation. We've now got very strong cash flow hitting our balance sheet, which gives us financial flexibility to pursue our growth goals. And we believe our formula for success is pretty simple, pretty well understood, and our execution of that strategy is underway. And our goal really is to, again, deliver superior returns by building a best-in-class multi-mine gold mining company. And so if I turn to the projects that, for now, will underpin that growth going forward, firstly, the Karlawinder gold project up in the Pilbara, just south of Newman. As I said, we've been going for just on a year now. It's an open pit mine, three-stage crushing in the plant, feeding a big ball mill into a CIL processing facility. We're currently running it between 4 to 5 million tonnes per annum, 10-plus year mine life, 1.2 million ounce reserve and a 2.14 million ounce resource. This is what the project looked like as of a couple of weeks ago, so we have made really good progress. In the last 12 months or so, we've mined in excess of 13 million cubic metres out of the pit, so for a company our size, it is quite a big mining operation. We do this in partnership with MACA, Mining and Civil Australia, our contractor, and they've done a great job for us through the worst of COVID and inflation and labour shortages and the like. In terms of the plant, as I said, the plant's now running at about 4.5 million tonnes per annum, recoveries in the mid-90s, plant availability up around 97, 98%, so that, again, that's a great credit to our team. We do get gas off the Kalgoorlie gas pipeline, which has to some degree insulated us from the very high cost of diesel that the industry is currently experiencing. You can see in the background we've got a large broken ore stockpile, something just below 2 million tonnes of ore already sitting on the stockpile, which gives us great flexibility with milling, and obviously that stockpile will be treated towards the back end of the mine life. The bulk of the infrastructure at the project is now in place. The tailings dam had its first lift in the year just gone, and we'll lift it again in this current financial year. But outside of that, that's the bulk of our capital for the year going forward. Most of the ancillary capital at the project is now in place and paid for. So if I look at our first year in review, I really couldn't have asked for it to have gone much better, particularly given the market that we've been in for suppliers and labour and the like. We hit steady state within the first 3 months of operation. For the year, we produced 118,000 ounces of gold at an all-in sustaining cost of $1,112 per ounce, which was at the upper end of our production range and the lower end of our cost range. The mine generated $141 million of operating cash flow for the year, including the start-up and ramp-up quarter at the beginning of the year. That gave us great flexibility to pay down our debt. So in the last 12 months, we've repaid $40 million of our debt facility, and we've taken our net debt position from its peak in July last year of $85 million to be in a position where we were $1 million cash positive or net cash at the end of June this year. Our residual debt with Macquarie Bank is $50 million. We've worked with Macquarie to convert that into a corporate facility, which now gives us great flexibility. That's got a single bullet payment in June 2025. So that allows us, obviously, to use our cash flow to continue growing the company in the meantime. In terms of the outlook for the current year, we expect to produce around about the same as the year just gone, around 115 to 125,000 ounces of production at an all-in sustaining cost between 1,100 to 1,260 Aussie dollars per ounce. So there's no doubt that Karlawinder has really established itself as an industry-leading producer in terms of cash flow per ounce of production. We also believe that we have a great opportunity to organically grow the project at Karlawinder. As I mentioned already, our reserves are currently 1.2 million ounces out of a resource base of 2.1 million ounces. Our reserve is estimated at a very conservative Aussie dollar gold price of $1,600 per ounce, which, as you would know, is about $900 below the current spot and quite a bit below the bulk of our peers in terms of the estimations that the rest of the industry is using. So that gives us quite a bit of flexibility. We're currently drilling out the area immediately below our reserve pit design, which is the down dip area where the bulk of those 900,000 ounces of our resources that are not yet in reserve are situated. We're drilling an RC program of 30,000 metres to get the density into that next 50 to 100 metres below the reserve pits to update the reserves in the coming months. We've still got a lot of that work to do and haven't returned a huge amount of those results yet, but so far so good in terms of what we've seen. You can see on this cross-section we're getting below the blue reserve pit there, we're getting the same widths and grade of mineralisation that we're seeing in the reserve. So we're certainly encouraged, looking forward to the resource and reserve update in September and October. In terms of exploration, we also have a big tenement package at Karlawinder, just under 3,000 square kilometres of ground, which is more than 100 kilometres of east-west strike of the greenstone up there. Almost all of the drilling that's been done at Karlawinder historically has been focused on the immediate Bibra mining area, so very little work's been done on regional targets. We do have a lot of regional targets that we would like to drill, but like a lot of companies in the industry, we're finding it a slow process to get access to those targets through the heritage survey process, which was severely hampered by COVID and obviously the level of activity up in the Pilbara. Hopefully we can crack that nut in the coming 12 months and get access to some of those targets for drilling. In the meantime, we're drilling 30,000 metres of air core into some near mine targets, and we hope to have news on that in the coming quarters. We're also quite excited about a tenement that we just bought in June this year, the Mumbakine Well tenement's 360 square kilometre exploration licence. It sits contiguous to our existing tenure and overlaps our access road into the mine site, so it's close to our mill. Some really interesting historical results on this tenement, rock chip samples up to 180 grams per tonne, and historic drill results at the central lode of 13 metres at 3 grams per tonne with no follow-up. So again, as soon as we can get access to that ground, this will be a high priority target for us in a regional program. So I guess exploration at Karlawinder, we've had to be a little bit patient, but we know that historically projects that we've been involved in the past, once you've got a mill turning in a district, exploration becomes a lot easier and much more amenable to discoveries that can change the value proposition for the project. So we'll push on with that in the coming quarters and years. So turning now to the Mount Gibson Gold Project, as I said, this one is located in the Murchison We acquired it in July last year. It was, back in the day, quite a high-profile producer between 1986 to 1999. It produced nearly 900,000 ounces of gold during that time from 14 shallow open pits. There was also a small underground mine there, which is reflective of the fact that there are some very high-grade historical intercepts below the sort of the open pittable depth at the project. The project was shut down in 1999 when the gold price was 450 Aussie dollars an ounce. So do the maths, that's $2,000 below the current price, and you can see why we're very interested to acquire the project. It basically sat off the grid for that entire time. For the last 12 years prior to our purchase, it was owned by a Chinese SOE, which owned the project for the iron ore magnetite project immediately to the north. And for the last 4 years prior to our acquisition, it was subject to a legal dispute as to ownership. Basically, the tenements were plainted, and it had gone through a number of court cases. We were able, I think, to provide a really good solution to the disputing parties involved in the project, and that allowed us, as I said, to buy 2.1 million ounces of resources for $39 million, which we think is, in the fullness of time, going to be a company-making acquisition. We inherited a really big database here, some 660,000 metres of drilling, and the exciting thing with that is that less than 5% of the drilling is deeper than 150 metres below surface. Our resource extends for the 8 kilometres of footprint of the tenure, and not surprisingly only averages 140 metres below surface, because that's the depth of the drilling that we've got. So you can see why we think there's great potential to grow the resources between along strike and below the current pit designs. As I said earlier, we do believe that the work that we're doing now is a platform to push this project into development in the medium term. Because of the historic challenges with the tenure, we only got the tenure granted in December last year. We hit the ground running with a drill program, an 81,000 metre drill program in January this year. We started with 3 RC rigs and a diamond rig. By the end of June this year, we drilled 80,000 metres at the project, which is an absolute credit to our Expiration team led by Billy Higgins to staff that program and keep it on track during the challenges of the last 6 months has been an exceptional effort. The results that we've turned up have been everything that we'd expected, and as a result of that, we've extended the program by at least another 24,000 metres, and I suspect that we'll be drilling here for a lot longer to come. We hope to have an updated resource on the project in September, and then that should lead us into a reserve, a feasibility study and a development decision by the end of the year. To that end, we've applied for and have had granted a mining lease for the tenure we need for the operation, and all of our technical studies and environmental work are continuing well at pace behind the scenes in parallel with the drilling. In terms of that 81,000 metre drill program, the objectives were pretty simple. Firstly, to validate the historical database that we bought, to reduce the drill spacing on the deeper parts of the resource where the density is lower, and then to start the process of pushing the resource beyond the current envelope. And I'm very pleased to say that we so far are ticking all of those boxes. In the shallower parts of the resource, we've turned up results like 11 metres at 3.7 grams per tonne, 12 metres at 6.85, 14 at 6.4. In the areas, deeper parts of the resource where we've got less density of drilling, results like 11 metres at 6.75, 16 at 3.15 and 24 at 3 grams. And I guess most exciting of all, we're starting to see extensions beyond the current resource outlines. Reported results like 24 at 2.27, 16 at 2.5, 4 metres at 118 grams per tonne, 10 metres at 6 and 10 metres at 4. So as I said, the drilling's really gone as well as we could have hoped. And we look forward to those updates in September and October for the resource and reserve. And I think we'll end up drilling here for a long time as we continue to move from the sort of the more known areas, shallower of the ore body to deeper parts of the ore body, and then in the fullness of time, working towards testing some of those high-grade results beyond the sort of the open pittable depths of the project that we did inherit. We're also quite excited about the exploration at Mount Gibson. We didn't know too much about the broader opportunity when we bought the project. We really focused mostly on the resource. But since we've had the data and been able to walk the ground, we can see that there's quite significant opportunity to push beyond those current resource footprints. And to that end, we're starting a 30,000 metre air core program, hopefully within the next quarter, to test a number of targets within 5 kilometres of our resources. So in closing on Mount Gibson, I guess I would just reiterate that it's not only that we think that this is a high quality project and does have the hallmarks of a project that can become our second mining operation. I think the second leg to any acquisition is that you've got to do it at a price that makes sense for your shareholders. And in acquiring the project for less than $20 per resource ounce, you compare that to the average M&A value for the Aussie gold space for the last couple of years, where the average payment was in the order of $270 per resource ounce. You can see why we think this is such a compelling acquisition for the company. So look, thanks very much for your time. I guess in wrapping up, I would say Karlawinder is a long mine life and high margin project. It's now, I think, established itself as a project at the lowest end of the all-in sustaining cost curve, and that should generate really strong cash flow for us and the flexibility to pursue our growth ambitions. We've got resource and reserve updates pending there on the drill outs that we're doing. And at Mount Gibson, the 81,000 metre drill program has been completed. The results have been fantastic. We're extending that work and again, look forward to the resource update and by the end of the year, feasibility, reserve and hopefully an investment decision. So I guess for a company our size, we think that we present an opportunity for investors, high quality management that have done this many times in the past, and a really compelling combination of operating cash flow and growth potential. So thank you very much.
Awesome presentation. Thank you, Mark. We've got a few minutes for questions here if anyone wants to raise their hand. Can you see anyone out there, John? Might just be you, Brett.
Mark, it's Brett Hucker. You've got an amazing track record of delivery for shareholders there. It's probably the best in the space that I can see. Can you just expand a little bit more on Mount Gibson and the opportunity there? It looks significant, and in fact, it may be bigger than Karlawinder.
Yeah, I guess that was when we bought the project, and obviously you can only talk within the constraints of JORC, but we always looked at it, and we sort of remind people when they look at it, it's got very similar tonnes, grade and stripping ratio to Karlawinder. Not dissimilar at all. In fact, the resource numbers are within 100,000 ounces of Karlawinder. But the difference here is that this project's only been drilled to 140 metres below surface. And it's only been drilled to 140 metres, not because the geology just suddenly dies out, but the gold price that prevailed at the time that it was owned and last worked on was $2,000 an ounce below the current price. So we think that, in the fullness of time, this will be seen that the geology will continue, the ounces will get significantly bigger, and I wouldn't be surprised if in the fullness of time this does end up being a bigger project than Karlawinder. Obviously we've got to mine around old pits and the challenges that we need to deal with on that, and the usual permitting process that we need to get through. The Karlawinder project was permitted when we got involved at Capricorn, which was a great credit to Peter Thompson and the team before us. So we've got to go through that journey, and we all know that can be a slog, but I think the prize is certainly worth waiting for here. And I think, as I said in the presentation, I think we'll be drilling here for a long time to come, because we're going to keep following our nose from shallow to deep and just continue to follow those intercepts as they come in.
Great. Thanks again, Mark. We're back on time for John. So thanks again to Mark Clark.